welcome. Latitude has started us off with the first very important comment. I am currently doing my taxes and I hate it. And I feel like that is a great tone to take into today. Maybe you will feel inspired after this. Although I learned something today about taxes and stimulus payments, which will make it into an episode, but I will, I guess, share it right now, which is that I found out that 5 states are charging you state income tax on federal stimulus payments for 2020, including, unfortunately, my state. So if you got stimulus payments and you live in certain states, even though it is tax-free at the federal level, it is taxable at the state level, which is really, I'm just very unexcited about it. So that's great. Rural cannot do their taxes because the state labor department won't send the 1099-G. They should have been sent that by now. That's very frustrating. I have been I did my taxes, but I am sitting on them. I haven't actually sent them in yet because I am waiting. I think I already shared this, but I am waiting to find out if if a third stimulus payment gets passed, and if it does, there is some debate as to what the upper limit is going to be for the income. And my 2019 income was low enough that would fall under both thresholds. However, they're currently debating for a single person, the threshold being between $50,000 and $75,000 annual income. And my gross income for 2020 fell right between those two. So I am hoping to not file. I have no moral quandaries about this. I'm waiting to file because it would be based on my 2019 income, not my 2020, if they pass it before then. So, so I'm going to introduce you to our drinks. We're going to talk about credit today, in case you couldn't figure that out from the title or you just stumbled into here for some reason. We are going to talk about credit today. Credit is one of my absolute favorite topics to talk about because I think it's a very fascinating system, and there's so many myths out there about credit that I think it's interesting to talk about. And there was some things going on about Biden talking about maybe nationalizing the credit system. So, we're going to talk about interesting things. However, let me introduce you to my drink today. This is a Purrbon drink that Erin made that is a take on a New York Manhattan, which is, I don't know, some fancy drink. What I will say is this is incredible, and what is particularly cool about it is it was made with Purrbon syrup. So a reduction of Purrbon tea made an entire bottle of this incredible syrup that can now be used to make drinks like this. So it's black cherry juice shooken with Purrbon shaken with Purrbon reduction, and it is incredible. Also, our house smelled very good when the Purrbon syrup was being made. And we have 2 donuts because everything was iced and the power was out last weekend, so the donut shop was not open. But they decided to redo Valentine's Day donuts, so they turned them into X's and hearts, and obviously a bunch of donuts are O's. But I got some of the seasonal flavors in the heart and the X. I thought they were cute. This one is buttered toast currant, and this one is hibiscus lime sea salt. So, I'm very excited. Ablejack is very excited about taxes. We're not actually talking about taxes today. We're talking about credit, but we're mostly talking about the food. With the Purrbon, I look like a noir private eye detective. I mean, if private eye detectives wear tiny yellow hats, sure. Well, I am actually really excited to talk about credit, and I had people send in questions because I find that credit is one of those. It's one of those topics I could talk about it all the live long day. I find it very fascinating. I find the history of how credit reporting agencies and bureaus came to be very fascinating. But I know that most of that is less interesting than how it affects your life. So I thought I would answer questions, and I got quite a lot of questions sent in. So I will try to answer all the ones that I can. Should we just dive into that? Should I just eat a donut and give up talking about credit whatsoever? Not sure how I feel about a hibiscus lime donut. Hibiscus lime sea salt donut. I'm actually really excited about it. I think I'm going to like it better than the current buttered toast donut, mostly because buttered toast isn't really one of my favorite flavors, but Latitude just had to switch from Free File USA, which I usually use because they would not let me fill out my 1098T. Oh, that's really frustrating. I almost always use H&R Block. I use it because if you go via the IRS links for Free File, then it is one of the best programs I have found for self-employed people. And like, I was a certified tax preparer for years, but I still use filing software instead of filling out the paper forms. Partially because there's a lot of complicated depreciation stuff on Schedule C, and I just don't like to do that math myself. I don't enjoy it. So I used H&R Block for years. I found them very useful for 1099 sole proprietor. This year, I actually went in and did H&R Block, followed the link to get the free file from IRS, and got all the way through it. And I had two things going on. One, H&R Block was claiming I was owed a refund of a significant amount, and I was like, this is incorrect. I know there's no way that I am owed this amount of a refund because I still had to pay taxes on all of my side hustle income. Two, they no longer will let you file Schedule C's using the free file link, which I feel like frankly should be not allowed. I feel like if they're like bound under law to have these like free file options from the IRS, they sure as heck should not be allowed to just be like, oh, you only get it for because I'm still filing a 1099. I'm still filing an EZ form. So anyway, I was very frustrated with it. Then I redid it on Free Tax File USA, figured out where things went wrong. I am owed a tiny refund instead of a massive refund, which was extremely wrong. So I don't know. There's my update on my tax situation, which I'm sure you all really care about. But if you have not filed yet, I highly recommend going to the IRS's free file website. Make sure you click the link from there. If your income is below about $75,000, then you are entitled to free file. You should not have to pay for tax filing software. That being said, if your income is over about $75,000, you might start to have some various things that it would make sense to pay a professional or at least pay for some of the more complicated accounting software. So, I mean, I have no freelance income. I am theoretically very simple to deal with except for the 1098T. That's the thing, though, is like, it's so frustrating that there's like, you know, you're waiting on tuition tax forms, you're waiting on unemployment forms, or you're waiting on unemployment tax forms, like any of these forms. And the idea that they could be, I don't like it. It's actually relevant to what we're going to talk about today, which is government interests and private industry combining to form a wonderful fun thing. And we're going to talk about the credit score side and not the tax side, but I think it's very relevant. Also, I need to put my iPad on Do Not Disturb. Oh, it is on Do Not Disturb, but it's still having messages pop up on the screen. That's great. Love that. Love that for us. If I ever become super rich, my singular goal will be an attack and and dethrone Intuit pack. I like that that's your single goal. Oh, I'm about to do the part where I deduct my textbooks and laptop from my taxes. That's one of the best parts is when you're like in school. There's so many things that are school expenses. I am enrolling in a Croatian language class, and I was like, before enrolling, was like, okay, what am I going to be able to deduct on my taxes this year? Like, should I pay for this through my business? Can I justify Croatian on my business taxes? Or should I try to take the lifetime learning credit? Anyway, I did some investigation. Joe says, oh, wow, we don't get to deduct those here. Here's the thing. You probably don't make students pay taxes on quite as many things as we make them pay here. Because one of the big reasons that you can deduct various things from your taxes here as a student is that we make you pay taxes on like scholarship income and stuff like that. So that is like, I had to pay taxes on my AmeriCorps stipend, or my AmeriCorps Education Award, which was a scholarship I got from the federal government for doing 11 months of service, like under a government contract, doing direct community service for $800 a month. You get $5,000 of scholarship money, and then it is taxable in the year that you use it. And you're only allowed to use it on tuition and educational expenses. So, and in addition to being taxable, it is taxable at 10% regardless of what your income is. So you can be living on poverty level and they still charge you 10% taxes, which I find very frustrating. So, yeah, we live in a great country. Serge says, hey, will you ever do an episode on building business credit? I recently got my DUNS number and start building business credits accounts. I'm now using my tax ID EIN to get credit accounts. That's actually very fascinating. And I have been approached by some of the agencies. So now there's new agencies that are letting you check your business kind of credit score. Since previously, a lot of the free tools that you can use to check your credit scores, they obviously don't apply to your business credit. And it was always kind of secret, right? Like you're building this credit file with your TIN, EIN, but at the same time, you are stuck like not really knowing how it looks. And there are now websites that allow you to check it. I've checked mine. So yeah, that would actually be very fascinating to do, especially because one of the main reasons that I care about my business credit score is because a lot of the best rewards cards out there are for businesses. And since I have a legit business, although you barely have to have one to get one of these business cards, but since I do have a legit business, I do a lot of my credit card hacking using my business account, actually. So, and it kind of lets me apply for more cards than maybe would be reasonable to do on my own. Joe says, oh, so weird thing. If I was a full-time grad student, my scholarship is not taxable income, but because I'm part-time and I'm also caring for my son, my scholarship is taxable. That sounds like a great system. Congrats, Australia, for a super sane system. Although I will say here, if you're not a full-time student, you can't take certain kinds of tax credits, educational tax credits. It's great. It's really lovely. Yes, my business is legit, but yours doesn't have to be. It's fine. Serge, I would love to do an episode on that. That actually sounds like a really great idea. So, thank you for the reminder. I have wanted to do a more in-depth, like, how to do travel hacking in 2021 with cards. I know a lot of people are not interested in travel hacking right now because it feels like we'll never be allowed to travel again. But I'm using this opportunity to do a lot of travel hacking and acquiring points, hoping that they don't devalue before I'm allowed to fly again. So let's answer some questions. But I think before we answer some questions, I'm going to give you a little bit of a general overview of what credit is and why it exists in the US. So, a little bit about the history of credit, because I think a lot of people get caught up in how unfair the system is or their frustrations with the system. And the the first myth that I kind of want to debunk is the idea that having good credit means you're good with money, or having poor credit means you're bad with money. Whatever bad with money means necessarily. So all credit is a measurement of how good you are at paying back your debt. It is a risk assessment for people that might lend you money, companies that might lend you money, about whether or not you are going to pay it back. Credit, you can be excellent with money, never ever take out debt, and then you'll have a 0 credit score, or you might have a very poor credit score because like one thing has been reported. So you can be someone that owns a house in cash, has never taken out debt for anything, and essentially has no credit score to speak of. And then you can be someone that has an excellent credit score but actually owes a ton of money, but you just pay it back on time every time. So what a credit score is that it is used, what a credit score is used for is it is used to give a number to you as a person about whether or not you are likely to pay back debt. And what it does is it helps lenders decide if you are a good risk. The downside of credit is that there are a ton of ways that it is used, unfortunately, in American society to determine if you're a good risk that have nothing to do with your ability to pay back debt. And access to credit is not universal across class, race, socioeconomic circumstances. So there are a lot more opportunities to build credit for people that come from generational wealth, from people that come from certain neighborhoods. And there are a bunch of different factors that go into it that are outside of people's control. The great news about credit scores in the US is that they're actually pretty easy to hack. Like, it's a decently easy system to hack. So the reason that we have credit scores in the way that we do now in the United States is that in 1971, we passed the Fair Credit Reporting Act. And what the Fair Credit Reporting Act did is that it was actually meant to make the system more fair. Prior to the Fair Credit Reporting Act existing, the way that lenders decided if they were going to lend you money, like let's say Bob, the banker down the street, was like, you went to Bob and you were like, hey, Bob, I want a loan. I want to buy this house. And Bob would do a couple different things. One, Bob, if he was a really small bank and you were in a small community, he would go around and ask about you to try to see if you are someone. Did you owe a tab at the bar down the street? Do you go to the right church? And therefore, does the pastor trust you? Are you a member of the right clubs? They'd ask around to find out if maybe you cheat on your wife. And the reason I use cheat on your wife there is because almost universally, women were not able to be extended credit on their own. It was much harder to get extended credit on your own, and your credit was tied to your husband's. So both feminists that were working to be able to have credit separate from their husbands, in addition to activists in the African American community that were working to make sure that there was actually fair access to ability to have relationships with banking institutions, lobbied for standards around the Fair Credit Reporting Act. And all three of the bureaus that currently exist, so there's 3 credit bureaus in the United States. There is Equifax, TransUnion, and Experian. All 3 of them existed before the Fair Credit Reporting Act, and they all had their own proprietary ways that they gathered information. But a lot of the ways that they gathered information was that they had investigators that would go and essentially be PIs to try to find information about people in order to build lists of, of people that were creditworthy. Now they all kind of have their own separate business models. Experian actually started initially in the UK, and what it was a list of merchants that kind of crowdsourced a list of, do you know if this person pays back their debt? And it was done as a way of, if they were going to, if a grocery store, for example, was going to lend credit or, something like that to a different merchant, they would go consult this list. They would pay a fee to get this list of whether or not someone was trustworthy. And now that's very close to what their reporting model is. Most of what they actually make money off of is, being able to recommend and do credit worthiness for businesses. On the flip side, what Equifax was started in like the 1860s, I think, in the US. And originally it was a grocery store owner that was actually just circulating a list to try to find out if people were creditworthy. But there were a ton of problems in this. One, as I mentioned, guess who got the credit? People that were deemed creditworthy were people that looked like the people that were then reporting on them. So, white Anglo-Saxon Protestant men. And quite often, credit was just completely inaccessible to Black communities, which is one of the reasons that generational wealth has been limited in the United States. It was not extended to women, and things like your religion could be part of your file, whether or not you cheated on your wife. So what the Fair Credit Reporting Act did is it made sure that there were certain things that they could not do. Essentially, investigators had to be open about the fact that they were inquiring for the purposes of credit, and it limited what could be on your credit report. So your sex or gender, your national origin, none of that could be listed on your credit report. And there was a limitation to the kind of information that could be available on the credit report. So initially, the system, as we know it now, was actually designed to make things more fair in lending. Unfortunately, it hasn't really worked out that way. There is a ton of ways in which the current credit system is extremely discriminatory and has contributed to the fact that Latino and Black families are less likely to have generational wealth. And that is because there are a bunch of factors that can kind of be baked in. Whether or not they have bank accounts with institutions that then report to the credit bureaus, whether or not they are able to get lent to because maybe one of the factors that goes into the lending process is that they are looking to borrow in a neighborhood that then has a bunch of African American people in the neighborhood, and it was historically redlined, and therefore maybe had higher rates of foreclosure. So then it will have a higher risk score in the profile. There's tons of different ways. And in addition, it can be even more problematic for women on credit history reports. One, because women are more likely to change their name as an adult. And two, quite often we see with divorces or marriages, it will only end up on the man's credit report when there is positive information to report. So that is quite often what happens. And what a credit report essentially is, there's two things. There's the credit report, which you are entitled to as a consumer. You are entitled to a copy of your credit report from every single one of the credit bureaus each year. So I recommend every 4 months you just go get a free one. Do not Google free credit report. Go to annualcreditreport.com. That is the guaranteed version of it. Credit reports, though, are kind of hard to understand, and I'm trained on reading them, and they can still be a little confusing to understand, although I think it's worth looking at them. But there are a lot of websites like Credit Karma, Credit Sesame, things like that do their best to make it easier for you to break down and understand what is showing up on your credit report. So a credit report is actually just that. It's a report. It's like a annoying kind of dense document. On the flip side, there is your credit score. So credit reports are what has to be reported, and that comes in a relatively standard format between all three bureaus. That being said, one, how do these companies, these three bureaus, make money? They make money because they provide information to lenders. So what I want anybody to remember when it comes to credit scores and credit bureaus is it is not there to serve you. It is there to serve the lender. The whole purpose of this is to determine and put a number on whether or not you are a good risk to lend money to. So how do they make money? Well, they 15,000 different businesses like credit card, agencies, auto loans, all of these things report each month information to the bureaus about whether or not people have opened up new accounts, closed accounts, paid them off, are over past due, whether or not they owe a lien or something like that. This gets reported to the bureaus. The bureaus then use proprietary algorithms to then determine their own score. So they all have their own scores and their own scales. Can we put this up now? Do you hear the cat, by the way? Because it's very loud out there. She is meowing, 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 meowing. Emily says, prior to the Fair Credit Reporting Act, we all sort of just eyeballed it based on racism. Also sexism, also nationality. We really just eyeballed it. Rural says, towns that size, they don't have to ask. Yeah, I mean, that's true. That being said, this is exactly how we end up with a lending environment, right? That isn't fair, is that it's all based on your relationship with the banker. Remember when Facebook was going to provide credit scores? I must have blocked that out. Free reports from each of the three each week now in April because of COVID. Oh yeah, I forgot about that. I kind of like, when I was talking about that, I was like, I kind of remember that. Yeah, and yes, and you can also freeze your credit report. We're not going to get too deep into the freezing credit reports right now, but I'm glad to know that she's picking up on the mic all the way from the other room. She is meowing because we are not paying attention to her, I think, but I will say there was a trail of sparkly balls leading out of the office, so I think she's constructing some sort of, crumbs through the forest made of sparkly balls. So, credit ranges. So each of the different bureaus, and the reason I keep saying the three bureaus is that these are the three bureaus that are the credit reporting agencies. And you can be a different agency that is reporting on credit, but these are the three that are regulated by the Fair Credit Reporting Act, and they have the contract. So you could go and set up a credit reporting agency, but if you don't have relationships with 15,000 different, lenders, you're not really going to compete in this market. So they all have different scoring models. You've probably heard people say FICO score. That's kind of used like Kleenex, but FICO is actually the name for the Experian score. They all kind of range. Generally, what you need to know is that if your score on any of these models is over 750, it's considered to be in the best possible range. There is, where did I put my little range? Oh my gosh. Don't you love this? This is thrilling content. Nope. Oh, just get some selfies on the screen. Don't mind me. I was gonna put the range. If your score is, so the way that credit works in the United States is that you actually have 0 until you open up a relationship with some kind of lender, and then when you first open up a relationship with some kind of lender, so that could be taking out a store credit card. That is a very common thing that people do when they're younger that starts their history. Taking out a student loan for college, or taking out a credit card. Those are the most common ways, although sometimes borrowing an auto loan, although it is uncommon to get an auto loan before you have any kind of credit history. Then you usually start in the 300 range. So just by breathing, they give you 300, as soon as they know you exist. Having a 0 credit score is better than having a 300 credit score. Them having no record of you is actually better than the very lowest. That being said, when you first start to establish it, you will start getting more and more you will start getting more and more information reported to the credit bureaus. And the number one most important part of your credit score is that you pay on time every time. That being said, there are different parts of the guts of your credit score. So this is true, but what I will say, remember, their business is providing scores to people that might lend you money. So one of the big ways that Equifax makes money is that they sell pre-approved credit offers. So that's why they sell your information to possible lenders so that they can send you pre-approved credit offers. All of their algorithms are proprietary, and this is generally what they tell us about it, but they make tweaks to these all the time. So the largest part is payment history, and that's why I tell folks that, like, there are tricks and hacks you can do with credit, but the number one most important part of your credit score is to pay on time every time. And if you have a history where that is not true, there are different ways to kind of try to fix or remediate that. But that is the largest portion of it. Then is the amounts owed. So there's different types of things on your credit score. One of those types is revolving accounts. And revolving accounts are lines of credit like a HELOC, so home equity line of credit, or credit cards are the most common type of revolving credit. So for me, I have quite a lot of credit cards open, and I pay them off 100% on time every month, but I have them open. The amount owed on them is very tiny compared to the overall amount of credit that is available to me. And this is very important because this is called my utilization. And utilization, they want to be less than 30%. So if you want to quickly boost your credit score and you have the cash available, if you owe money on a revolving line of credit, like a home equity line of credit, or let's say you have a $2,000 credit limit card and you charged $1,000 on it, then you would have a 50% utilization score. And that would drag down your credit because it's showing that you're using up a lot of the available credit to you. And if you could pay that off and you can get it below, the best is under 10%, then you will boost your credit score quite a lot. So one of the really important things for folks, if they don't have a lot of available credit because you're just starting out, like usually your first credit card they'll offer you like an $1,000, or my first credit card had a $500 credit line because I had it was just with my bank that I had a checking account with. So I had a $500 credit line on it. So one of the important things that you can do is that you can pay that card off before the due date, before it gets reported to the bureau. So what I recommend to people that have very low amounts of cards, either if you've got a $500 credit limit, you could just stick Netflix on it every month, make sure you set it on auto pay to pay off, and then your utilization will be quite low because $8 out of a $500 credit limit is quite low. But alternatively, you could pay it every week, or you could pay it before you know that the statement posts, and then your utilization is going to be zero. The thing is that a lot of these cards, they now have different amounts that they need it to be shown as active, and you run the risk of, you don't want to just necessarily open up a bunch of cards, forget about them, because they will then close your card if you're not actively using them. And if you haven't charged anything on for between 30 and 90 days on some cards, they'll stop reporting to the credit bureaus, and then you won't get that positive history of an on-time payment, because every single time you pay that card on time, you are getting a positive payment history, which helps because it contributes to your positive payment history, because remember, that is the number one most important thing. So amounts owed can also be a factor if you owe a lot. So one of the things a lot of people see really affect their credit score is that they owe large student loans when they're first starting out. And the great news is they're getting that positive payment history. The bad news is that if it's very large relative to your other credit, then you can end up with, a lower credit score just because of the amount you owe. And remember, this is about your risk to the lender. So if they look at you and they say, well, you owe $100,000 in student loans, that means that, sounds like maybe you might not pay us back because you owe a bunch of other people before us. Length of credit history. So this is the one that is very hard to fake, but there is a way to fake it. So length of credit history is about how long your cards have been open. This is one of the hardest ones to fake simply because you gotta have length of it open. And like I mentioned, opening extra cards and having more available credit that you're not using can boost your credit score, but it's going to lower the age of your credit. The easiest, 100% easiest hack for this, which is one of the reasons that people that have access to higher socioeconomic class, parents with good credit scores or aunties with good credit scores, is that you can get added on an authorized user on the oldest and best credit card with the longest payment history from someone you know. You're not going to take any money out of it, but then you automatically inherit the history of that authorized user. So that can be a huge boost to your credit score. In fact, it's actually a line of business. If you're someone like me that has very good credit history and has some long trade lines, then guess what? You can actually, strangers will pay you to be added as an authorized user, and they won't ever get a card, but you'll add them to the trade line. They're not going to charge on it, and they receive the positive history, which can help them boost their credit. New credit. So you will get what's called a ding. There's a hit to your credit. Hits tend to be more permanent. It takes longer to recover. And then a ding. And a ding is a very technical term we use in the credit world to mean that your score will recover. It's a small, tiny amount that will be taken off your score, and it will recover within 90 days. And you often, if you have been extended new credit, you'll often see a 10 or a 15-point ding to your credit score. And that's just because if you're going around and asking everyone to borrow money, therefore you have a bunch of new credit, then they're going to be a little nervous about lending because they're like, oh, what's going on in this person's life? Are they actually going to pay this back? And then last 10% is types of credit used. This is one of those big things. Like I have a great credit score. I have over 800 credit score, and I have it entirely from credit cards. I don't have any other kind of debt. And I pay my credit cards off every month, but it constantly will be like, you should take out another loan so that you have a better mix of credit. It's not a huge effect on your credit, and you can totally build a great credit score without taking out a mix of credit. But I see a lot of people that'll get kind of pressured into it. I couldn't get a $7,000 car loan because I didn't have a credit card. When I got a credit card, I got a $9,000 limit, shaking my head. I know, this is the thing that's so frustrating across the board. Me previously was not paying back on time every time. Well, and Dean, you are in the UK, and there are differences to the system in the UK, but you have the same reporting bureaus. One of them actually started over there. But there are some slight differences to how it is set up in the UK. The big one being that it is tied to your physical address. Here's the big thing to know about credit scores in the US. 30% of people have an error on their credit report. And one of the big issues that comes with credit is that sometimes people dig up their report and they find out that people that are victims of identity fraud, most identity fraud happens because someone known to the victim. Quite often it'll be a mortgage taken out by, when this person was 2 under the SSN of the person that had identity theft. This stuff happens all the time. It happens within families. And one of the problems is a lot of times people don't want to turn in family members. But people have errors on their credit report. You are entitled to fix them. They tried to make it a little better with a new credit thing that they did. It still can be really hard to fix errors on your credit report. Brianna says, my mom did this without asking me. Oh, added you as an authorized user. It is, it's helpful from if they have a good credit history. It's a huge downside if they don't have a good history. Rural says, I'm going to put my nephew on one of my oldest cards. He's 6. Emily says, this conversation prompted me to ask for a credit line increase. Here is my advice for credit line increases. Now we're just getting into Lily's hacks and I'm not answering questions. But here's what I'll say about credit line increases. So if you initiate it, it's you asking for new credit. So remember, asking for new credit gives you a temporary ding because it is going to initiate a pull on your credit. But if you don't initiate it, then it won't negatively affect your credit. So how do you get a credit limit increase without initiating it? One, sometimes they just hand it out to you because sometimes they're just like, they just love giving you, if you pay on time every time, sometimes they just like to reward you with a credit line increase. The other thing that you can do is that if your income has gone up since you've applied for that card or, gotten that card, there is always a box where you can report changes to income. If your income has gone up and you want to see if it will trigger a credit line increase, one thing that you can do is go into the box to update your income. It's probably like in the My Profile section of whoever your credit card is. And you can update your income if it's gone up and then just wait. Quite often your credit line will go up and they will have initiated it, so you won't get the ding. Once again, quite often the increase in your credit line will way offset that small temporary ding. Serge says, I jokingly applied for an auto loan thinking I wouldn't be accepted, but it was. I know you like cars, so I hope you wanted it. My longest held back current account was not on mine. I just found this out. Can't add it, but I don't gain all that history, which sucks. That sucks. One of my aunts stole my and my brother's identity when we're little. It sucks. It's also, it's so common. A lot of people have it happen to them and they think it's just in their family, but it's actually extremely common. And I think there is this very large perception of identity theft as something that happens with hackers or people that are stealing mail out of dumpsters. But the vast majority of identity theft happens from family members, and it often happens before the person's too young to even know about identity theft. So, not believing in Wells Fargo is true. I agree with that concept. Okay, I'm going to answer some questions now since people were asking me questions. You can probably put these, they're big words, so you might be able to put them on the top of the screen. So first question was, how do student loans contribute to the overall credit score? So student loans are part of your overall credit portfolio. If you don't have any other type of credit, like you don't have any student loans or an auto loan, to actually report positive information on your credit, then taking out student loans will help you build a credit profile. The downside is if you are currently in school and you have nothing else on your credit, so you don't have any, credit cards or anything, and you're not currently paying on your student loans because you're in school, then you may have a very serious downside of it can have a very large negative effect. That being said, what's great about student loans is that they are installment loans. And they are something that you pay on every month. So you get the positive information of paying on time every time. But student loans have a very significant impact on your credit score, especially because for a lot of people in the US, until they get a mortgage, or sometimes even after they get a mortgage, it can be the largest amount that they owe. And remember that amounts owed is a huge part of it. But the largest part of your credit score is payment history. So paying on time every time. Another thing that you can do with your student loans, if you are still in school, one, I recommend, if it's possible in your budget, to start paying interest on your student loans while you're in school, because if you're not on a Perkins loan or something like that where the interest is paid while you're in school, because what's great about that is you're preventing that interest from capitalizing. A lot of times it'll only be $40 a month or something. So, it's a bill. It sucks. You're on a student budget. But if you can pay that interest on that student loan while you're in school, that also is going to give you a payment history of on time every month. So it will, one, help you get ahead on that loan. It's going to reduce significantly in the amount you owe overall because you're going to have less interest capitalizing on that loan if you can pay interest while you're in school, and you're going to get a positive payment history. My score is in the high 600s. I can barely keep up with my minimum student debt payment, so that total debt is only going up the next 4 years. I'm not excited for that regarding credit score. Well, one of the things that people asked about was how to build their credit without taking out more debt. And I think this is relevant because there's a bunch of different things that you can do. Also, I guess I should have prefaced everything with this because I kind of jumped immediately into the story of credit. But I think it's really important to understand that you can be financially well and have a terrible credit score. And additionally, you can live happily without good credit. Like, it is totally possible to make great financial choices and be outside the credit system, but it can make things harder. And additionally, one of the things that having good credit score, a decent credit score can give you is that it be another tool in your toolbox. It's another thing that you can have around, but it isn't essential. And it doesn't necessarily, having bad credit says nothing about you as a person, just like all like debt and everything. It doesn't mean you're a bad person, doesn't even mean you're an irresponsible person to have bad credit. And two, like, it is in no way indicate whether or not you are financially well. But there are ways to raise it so that you can have that tool in the pocket, and it can be very helpful if you want to borrow money in the future, because that's mainly what it's used for. If my income has gone down, do I have to / should I report that? Don't report that. No. There's no, like, it's possible at some point you signed a form saying will you report it if your income goes down? But no, you don't need to do that. One reason that you might want to report to a lender that your income has gone down is if you have student loans and you're on an income-based or income contingent repayment plan. So that would be one of the few instances where you might want to report to a lender that your income has gone down, but that would be the only circumstance in which I would tell them that. So yeah, like quite often people will have very high credit limits from when they had much higher incomes. But they'll start taking away those credit lines if you're, using them and not paying them back. So don't worry about the lenders. This is maybe not the most useful question. Okay. All right. Ethereal asked this: how do retail financing loans like a firm show up on your credit report and impact your score? This is like incredibly common. This is, I think, what's so interesting about the world of credit is that we're designing a lot of new ways to do old things. So what a firm and pay it later, those kind of retail financing things, you've seen them, they've exploded in the past year thanks to Corona and internet shopping, are point of sale types of financing for purchases. And they have a couple advantages and disadvantages. And the complicated answer to if they impact your credit is we don't necessarily know. So one, a firm is a very common one. A lot of people have seen that. Those are essentially contracts with the retailer that is facilitated by a third party like a firm to pay in chunks for something. Quite a lot of these are 0%, but they might be up to 15%. Technically, what they are is a personal installment loan. That being said, there are a couple advantages to them. One, if you have very little credit or you don't have access to something like a credit card, then it can be a way to spread out a large purchase that you might not be able to do because you don't have access to something like a credit card or something like that. They will maybe possibly lend to you if you have low credit and you wouldn't qualify for a credit card anyway. So, say you want to buy a Peloton bike or something and you decide to, by the way, there's a hack. There's like a dupe that you can get for $200 instead of $2,000 on Amazon. So do that. But if you wanted to finance something like a Peloton bike, that's $2,000, you would be able to spread it out with 0% financing. These have really exploded. What they will do is they're going to do what's called a soft pull on your credit report. So a soft pull is what they will commonly do if you try to go open up a new bank account. You won't get that ding that you would if you had applied for a new credit card. That being said, sometimes they will still look at your credit report, but they may still choose to extend you credit. So if you've had an Affirm payment with them before, then and you paid it off just fine, then they might still choose to extend it to you. Another downside to Affirm or some of those is that they can theoretically report to the credit bureaus, because remember what we said, what's very important to building credit, paying on time every time because of that payment history chunk. So those things, quite often with the 0% ones especially, they are not actively reporting to the credit bureaus. One, they might have less of a relationship with the credit bureaus, right? Because remember, it's a two-way street. That's the business model of those credit bureaus, is that they then sell information back to lenders. So they might not have an active relationship. It's just like how your landlord could report that you paid on time every time to help build your credit. And we'll talk about how to do that if that is something that you want to investigate. But you may not get that positive information. So if you are trying to build your credit and you do have access to even something like a secured credit card or something like that, if you want to build that payment history, it might not be the best positive thing. Additionally, one of the downsides, right, with something like Affirm or something like that is that it is still taking out debt, and you do still run the risk of you might not be able to afford it. So if it is a small purchase, it is because it is like it is essentially creating debt. It is important to make sure that you can manage payments and things like that. Can we include expected investment income in credit requests? It depends on the credit requests. Quite often they'll have like a separate thing for salary from job, and then they'll have other kinds of things. You are usually allowed to report any sort of income that you do expect to receive. And you have to be allowed to report alimony and things like that, thanks to some work by feminists. So, yes, they are not supposed to be able to discriminate based on the type of income that it has. I like that I can only see message retracted on Surge. It makes it sound very suspicious. Ash says, finally paid off my mattress with Affirm this month. Yeah, that's like a great example of a large purchase that like 0% financing can be like a very good option for people. That being said, I do think getting some of that positive, like if you use a store credit card, that actually counts as an installment loan for a lot of people. So if you need to get that mix of credit, store credit cards are notoriously some of the worst in a lot of other ways. Like they'll charge you an annual fee for not using it for a long time. A lot of people get kind of talked into buying them when they're like checking out at Old Navy or whatever. And remember, credit is a big business. Financing is a business that makes money. Victoria's Secret makes more money off financing than they do off bras themselves. So it's important to remember how large a part of like finance is a part of the retail business at this point. That being said, you know, it isn't bad to choose to use it, but it may not help your credit. Rural says, oh, I might need to get a store card. I'm just going to recommend like really investigating what store cards you get, because a lot of them are not bound by some of the same rules around credit cards, because they are considered a different type of line of credit. And so they're bound by less transparency rules that the CFPB passed for credit cards and revolving lines of credit. If you default in the future, you should always report up-to-date income accurately. Otherwise, they might think you are trying to commit fraud. You probably don't want them accidentally thinking this. Yes. Accurate. This is what I'm going to say. I would not recommend volunteering the information to your credit agencies that your income has gone down. That being said, you definitely don't want to inaccurately report income when asked. Okay, Brackenjoy asked, how do credit scores in other countries work? They are different in every country. I think what a lot of people are surprised to learn is that even if they have a great credit score here in the US, if they move to another country, they don't take that with them. So not every country has credit scores that... No countries have credit scores that work exactly the same as ours. I would say the UK has the closest system to what we have. They have some of the same agencies as we do, some of the same bureaus as we do. But theirs is very interesting because it's actually tied to your voter record. So it's like tied to address, and you have to start having your like council voting record established in order to start building credit in the UK. So it is very different. In Germany, it is, and in a couple other countries, it starts high and it goes low. So here we assume that you don't have any credit until we learn something about you, and then you build it up. In other countries, you're assumed to have perfect credit, and then once you start doing things where you aren't paying it back, you can lose it. So it's very different. Okay. How does it work with people in the US temporarily? If you are in the US temporarily, then usually you can not, you will have no credit history here in the US. So you're essentially starting over from scratch just the same. If you do not have an SSN, you can still build credit here in the US using a TIN, which is your taxpayer ID number. You do have to have some sort of TIN. The risks for issues with your credit report are higher without the SSN, simply because you don't have that individual identity number, right, to be tied to. But if you take out any money, you will start building a credit file here in the US, because it is just a file of, people that borrow money. That being said, like, even if you have a banking relationship with Barclays abroad, if you come to the US, that doesn't carry over to your US credit history. That being said, if you do have a relationship with Barclays and you're a very good customer in another country, you might be able to come to the US and, appeal to that bank to start lending to you based on your credit file abroad. But it really depends on the banking institution. And what's the implications? Yes, this is a very interesting question. I had to go read the proposal for it. What is the implications of the Biden proposals I've been hearing about with creating a federal program? I don't totally understand how it's supposed to reduce inequality if it's not materially a different system, but I also don't really know much about it. So it isn't really gonna reduce inequality because it is fundamentally the same system. It's just proposing nationalizing a system that is already nationally regulated. And I'm not that on board with it. So this is a Biden proposal that is just that, a proposal. It's not even a bill. It was a floated concept that they would then nationalize the credit bureaus and roll them under the purview of the Consumer Financial Protection Bureau. The Consumer Financial Protection Bureau is a regulatory agency that was proposed and put in under the Obama era and headed by Elizabeth Warren. And what the Consumer Financial Protection Bureau did is, after the large crash, essentially it said, seems like there's not enough regulations to protect like people from banks. And largely the reason that it exists is the idea that, like, we regulate cars that people can buy, so why are we not regulating financial products in the same way, from advocating from the consumer perspective? So that's what the Consumer Financial Protection Bureau was born, why it exists. It does have some purview already, but unfortunately a lot of that was gutted under the last administration. It does still have influence on Fair Credit Reporting Act and other kinds of credit standards that apply to the private industry. That being said, once again, I've pointed out numerous times that the credit score is not there to serve you, the consumer. It is there to serve the lender. And the big problem that I have with the credit system, besides, algorithms that are proprietary and hidden from view, that obviously have lots of racist and sexist ways in which they influence access to credit, is that, two, it is used as a proxy for a bunch of things that aren't just about lending you money. And that kind of leads into the next question, which was, where did it go? Gotta find it. Okay. I get why you might want a credit score. if you plan on getting any loans ever. But what if you own your own home and plan on making all future financeable purchases in cash? Do you still need a credit score? And the answer is no, you don't need one, but you still might want to have one because there's a bunch of ways in which credit can influence things in your life that aren't just about borrowing money, which is why I get very angry about the system. But here's some examples of things that having no credit score whatsoever could negatively impact. So you said you own a home. What if you end up wanting to rent an apartment at some point? Let's say you want a pied-à-terre in Manhattan or something like that. I've been watching way too many New York City real estate tours. But let's say you want to rent something. Your credit score can be very important in whether or not you get an apartment. Even though you're not borrowing money, that is quite often used to check it. Say you want to get what is considered to be an elective medical procedure. Even if you have the ability to pay for it in cash, quite often they will check credit. That being said, for any small purchases, cash does really talk. But quite often you will get a credit check, even just for the ability to, like, say you want to get something like LASIK or something like that. Other things that it can be used in most states in the US to evaluate you for jobs. Your credit score can impact whether or not you get extended security clearance. So if you work in a job where you might need security clearance, there are states in which it is banned from looking at your credit score in order to offer you credit. But in all of those states, there are exceptions if you work in certain industries. So if you work in certain industries where you are susceptible to, I don't know, like international spies, or, for example, you have access to money in a corporation, they will quite often check your credit because they want to know, oh, are you drowning in debt? Because maybe we don't want you managing $500,000 of our annual budget or whatever. I'm not saying it's great, but it can often be used to evaluate you for jobs. It can be hard to rent a car or take out a hotel room if you have a poor credit score. So I have a friend who, defaulted on some student loans when she was younger. It's almost dropped off her credit report, but it is incredibly hard for her to just rent a car. She's way past those student loans, she like pretty much just lives outside of the credit system. And, she is a 40-something-year-old woman and she wanted to just, rent a car and had a lot of trouble finding a car rental agency that would allow her to do it because she had poor credit. Quite often, utility companies will check your credit. So you move to a house or you want to set up a new account. Maybe after this past week, you want to switch power companies if it's an option for you and you're located in, I don't know, a state like Texas. Quite often you'll have to pay a cash deposit, oftentimes a very large one, if you have poor credit when you try to set up new utilities. And this one, which I think is very important, is that your insurance rates can be determined by your credit score. So how much you pay for car insurance, how much you pay for renters or homeowners insurance, all of those can be factored into with your credit score. So that is one of the reasons that I think it's very important to recognize if you choose to step back from the credit system, all of which are fair. I know plenty of people that are amazing with money that just aren't on the credit system. They've always paid for everything in cash. They just don't have any record of themselves. But it can have impacts. So yes. My friend got interviewed to work at the NSA and had to do an absurd credit score rigmarole. I mean, I interned at the police bureau, and the amount of stuff that I had to do just to get an internship at the police bureau, I'm not surprised if, you want to go to the NSA. That's like many steps up. It was for the financial part of the police bureau. So, the credit systems that are in the shadows are what scare me. We don't know how they work or what other know. I think that's what's so frustrating about that. I think that's one of the appeals of kind of a more nationalized system. I don't think the likelihood of that proposal having any teeth. Just think about how many businesses and how large the industries that would be killed by nationalizing the credit bureau. And I'm going to say there's a lot of ways in which having the government run things don't necessarily make it more discriminatory. It obviously credit agencies are going to be and the whole credit industry is going to be way more into the idea of regulation. All that regulation they hate, they're going to like it a lot more than having their entire industry destroyed. And then a very important one from things that credit scores impact is your ability to get a mobile phone. So a lot of people don't realize that here in the US, if you go set up a contract phone, not just if you're borrowing for the phone, but even just set up a mobile phone contract, they will do a credit pull. And I'm very annoyed because they are required under the Fair Credit Reporting Act to tell you that they are doing a credit pull. But I also have been a retail employee and it's very stressful and they're not very educated on the rules around credit reporting. But quite often they are doing a hard pull on your credit report to determine whether or not they're going to extend you that. And I know a lot of phones that have to have gotten track phones, which are essentially phones that you can get, the sketchy, expensive phones you can get if you don't have good credit. So yeah. Oh, Serge says, weird how mobile phones don't report, but they can pull. Hello. I love how you all are just like seamlessly transitioning for me. I'm doing a great job here. Don't you love just seeing all of my slides before I actually do them? Okay, Sheila asked, how do you build credit without loans or a credit card? And what to look for when you do your first credit card. So, I know plenty of people that are super scared of debt and do not want to take out credit. Or they just know themselves and they know that having access to a credit card, they are going to take it out and then they're going to spend it because they're going to view it as free money because that's the way their brain works. They have like impulse control, I know people that know themselves well enough to know that they cannot be trusted with a credit card. There are other ways to actually build credit. So one option is there are third-party firms that you will have to pay a small fee to, but if you are already paying things like your rent and your utilities, you can actually use them through a portal. There's a couple different websites. I think I will below link to the podcast episode, but if you just go on ohmydollar.com and you search like credit, you should be able to find the link to the episode where I talk to you about how to build credit if you do not have any. But there are third-party websites that you can use that will actually report your utilities and your rent, things that you normally pay as long as you pay them on time as trade lines. And I think this can be very helpful because if you're very good at paying those bills but don't want to take out debt, that is one way that you can do it to start reporting those payments. That is one option. Another option is to take out something called a secured credit card. I know it has credit card in the name, but it is a thing that you can get if you have terrible or no credit whatsoever. And it is essentially it is designed as a way to build credit. So it's often called, it's a secured credit card or a credit builder card. What these are is you actually have to put money in an account, and that is how much your line of credit will be on the card. So secured credit cards, you'll find them very commonly at like credit unions and, smaller local banks. And they're great. So you'll have like if you've got like $200 or $500, you will put that into account. It'll be locked up. And then you'll get a credit card with that credit limit. So let's say you get a $200 one. You put $200 in the account. You can't touch it. It's locked up for like 6 months. But then you get that credit card. You charge Netflix on it every month. Put $12 on that card. You pay off $12 every card. It does not come out of the account. It's not like a debit card. You'll pay $12 from another account. And then at the end of 6 months, you'll now have 6 months of positive payment history on that card, and it will be reported as a trade line. And it's called secured because there's two types of debt. There's secured and unsecured. Secured debt is when there is something to take away if you don't pay. That would be an auto loan, a mortgage, right? Because they'll take away your house, they'll take away your car. Unsecured are things like credit cards because they're not going to come back and take away, every cappuccino I bought on my card. and student loans, which are unsecured because it's only the knowledge in your head that they have, and it's much harder to suck out of your brain and take away. So there's a difference between secured and unsecured, but a secured credit card kind of bridges that gap because there is something to take away. It is that money in that account. And what's great about secured credit cards is they also kind of help you build up a little bit of a savings buffer too at the end of that time. So it is very helpful. If you do want to take out your first card and you like have no credit history, you may not have to get a secured card. Like for example, my first card was not a secured card, but it was with a bank that I'd had for a long time, that I'd had since I was a teenager. It was like my original bank. And so they were willing to extend it to me because I had customer history with them. Another thing you can do is something called Experian Boost. The downside is this is only going to help your FICO score, your Experian score. But Experian Boost is a free thing that they do, and it can help you start reporting payments like your rent and your utilities. And it can really help you raise your credit score. And then last but not least, it keeps coming up, but it is one of the ways to build credit. And it is also one of the ways in which we are born with an unequal platform in which to access credit, which is get added as an authorized user. So if you've got someone in your life that has a great credit score, that has a long credit history with a card, asked to be added as an authorized user on that card. They don't have to give you a card. You're not going to charge anything on it, but then you'll inherit that history, and that can help you build credit. I do like talking about credit more than I like eating donuts. Are we very behind on donuts? Let's do it. Let's go for a donut. But yes, Serge, this was also relevant to Affirm. It might not report the positive payments, but guess what? They sure as heck are going to report if you don't pay. And that is what's true also with utilities, rent, mobile phones, all of these things. They aren't going to report when you're doing things well, but then they'll sure as heck report if you do not pay them. All right, which donut should I eat first? Should I eat the heart one? This is so cute. It's a little heart donut. It's very hard to, it's like going to be hard to do because it needs a little plate, but this is the heart donut, and it is a buttered toast currant donut. And then this one is an X, because it's like XO, and it is a hibiscus lime one. I think I'll eat this. I'm sorry I'm so behind on the donuts, you all. I just get so excited about talking about credit. I thought of Gossip Girl too when I said XOXO. I will say, I did get these last night, and I know they do not want you to eat day olds. I'm sorry. I'm not getting a lot of hibiscus lime out of this. It's more just like a donut. Oh, I got to the sea salt part, and that part is great. Okay, someone describe what a currant is to me, because I can't really remember. I think they're tiny, like tiny berries. Are they a vegetable? Someone's going to say they're a vegetable. There's 100% of cat hair on this donut. That did not come from the donut shop. I feel like I've been having a lot more it's just a donuts. The currant smell, this is like, it's like a peanut butter and jelly without, it's toast. It's like having a donut toast. These are actually like buttered toast little pieces on the top. It doesn't smell that curranty though. If they were dried white grapes, why are they red? Tell me. I don't really know the answer. Are they actually vegetable? I think they might actually be vegetable. Oh, they're golden raisins? They come in... Claire is speaking very confidently. Currants are tiny berries. They come in black and red varieties, and I believe one of them is illegal to grow. What? I need more explanations of that. Currants are not related to raisins. Okay. What? Talk about those guilds or clans you can join to help build your credit business. I've heard about them. They can give you access to capital as well. It's a little out of the scope of the regular credit. But the version of this from the perspective of like an individual credit user is that you can build credit from personally by accessing trade lines. And you can essentially just search for trade lines and get added. Like, if you don't have an auntie that has really great... I always assume it's an auntie. In my head, I have a very good picture of the person that extends this trade line to people. But if you do not have someone in your family or social circle that you have mutual trust with that you think would be good to add you as an authorized user, you can actually pay... It's called trade lines to be added. And it's usually a very nominal fee, and it is a very good way to build your credit. Current colored clothing? What is current color? Illegal in the US because invasive. That sounds like one of those things where it's illegal in some states, but not all the states, because there are certain states that don't care if they have invasive species. I am British. We know not the foods. To be fair, like, you know the foods. It's just that your foods are all, like, the same thing named totally different things that are the opposite of what we call them here. But I've had lingonberry stuff here. Clearly, I should have done some research on what a currant is. I do think, so I've been very, like, day-old donuts are fine. I think these are a little older than I normally would eat the donuts because I got them right before they closed last night because they let you buy one, get one half hour. And I think these might be a little too old. They're good, but I think they would have been better if they had been fresher. All right, well, I think what we've learned is no one has any idea what a current is. Sheila had another question about credit. Can we talk about credit instead of currents? Because I know a lot more about credit, but I know about current accounts. Haha. So, those are the ways you can build credit without loans or a credit card. The other thing that you should look for if you are trying to do your first credit card, one, if you have no luck getting one, if you can't get extended one, you know, from an institution you're already involved with, then you can go for that secured credit card. But what I recommend, you do not care about the interest rate when you are first looking for a card because you aren't going to take out debt on it. This is the goal. The goal is that you pay on time every time. So they're going to try to lure you in with all sorts of like cool interest rates. Doesn't matter. Usually the way that they describe the interest rate on a card will be APR, which is the annual percentage rate, but they usually compound more often than that. So what I recommend looking for, one, If you have no credit history whatsoever, then and you are a student, or if you're just like below the age of 24, then you should look for a student credit card, because quite often those will be extended to you regardless of your credit history, because they're trying to lure you in and get their fingers on you so they can take your money. It actually, one of the things the Consumer Financial Protection Bureau did with all of the overhaul of credit is they made it so that you couldn't just give credit cards away with free t-shirts on college campuses, and you can't like recruit within certain distances of colleges, which is how a lot of people got into trouble. But I think the things to remember: one, it isn't free money. It is a thing you need to pay off, and ideally you are only going to charge on it what you actually can pay. There are reasons to use credit cards in order to be strategic about purchases, but for your first credit card, you definitely should not be viewing it as free money. Two, I recommend trying to go with an institution you already have a relationship with, as long as you're okay with that relationship. If I recommend using one of those websites like Credit Karma, Credit Sesame, they will give you estimates of what cards they think you can qualify for. So if you have no credit history whatsoever, they're probably going to recommend a lot of these like student cards and things like that. That being said, you can always go with a local credit union. Credit unions have an obligation to help people in their community build credit and things like that. That's part of the charter of being a credit union. So if you do have access to one of those or a community bank, that is a good place to look for your first credit card, especially if you already have a banking relationship with them. But what I recommend is, I think it's very easy to get lured in by people like me that do a lot of travel hacking and get a lot of credit card rewards points, which I think is a very fun game to be involved if you like spreadsheets and deadlines and free travel. But it is not, when you're first building your credit history, that is not the first thing you should be doing. So don't aggressively go after those. And then last but not least, this is my recommend. So look for a no-fee card, and then you may be able to get something with cash back. So they do have to say what your annual fee is on the card. There are lots of no annual fee cards, and most of the ones you can get approved for when you have no credit history are no annual fees, but just don't get lured in by like $0 the first year and then $95 every year after that. You shouldn't have to pay an annual fee for a card when you're first starting out. Oh yeah, the only way I could get a credit card was a student credit card through Discover, and now it's my oldest card, and it looks very good. Yes, so that's one of the big recommendations for your first credit card. The reason I recommend a no-fee card, and to do with an institution that you plan on being with for a while, is because that is your oldest card, and you are going to try to never have to close it. So you definitely don't want something with an annual fee. I have cards with annual fees. I have one with an incredibly high annual fee, and I hold on to those because I get the value out of them that the annual fee puts into them. But I open a lot of annual fee cards and then I close them. That is not what you're going to do with your first card, because obviously you want that long, you want it to raise that average age of account with that long history. That's important to your credit score, so you want to hold on to it. Would my score of 750 drag my uncle down if he allows me to be an authorized user? All his scores are perfect and been in business for over 30 years. Would my scores impact him negatively? No. That's what's so cool about the authorized user. You're gaining the credit history from whatever he adds you on an authorized user to. You're not gaining his whole credit score. You're just gaining the positive history on that one trade line. So whatever that one card is. So usually ask him to pick whatever, either his highest credit limit or his oldest card. You want it to be at least a 2-year-old card, but if it's 10 plus years, it's even better. No, you will not drag it down. The only way you could drag it down is if he makes you an authorized user, gives you a card, you charge a bunch of money on it, and then it doesn't get paid off. Then that would drag down his score. But no, it will not negatively impact him. It will only positively impact him, and that is why it will only positively impact you, and it will be neutral to him, which is why one of the reasons people pay strangers to do this. Oh yeah, that's how I got in trouble. Air Miles credit cards. Still got the Air Miles, not the cards, and can't afford to go anywhere. Yeah. I think I'm looking at like I think I have 250,000 miles right now across a couple airlines. Can't go anywhere with them. What if I make him an authorized user on my card if my scores are lower? There's no reason to make someone an authorized user on your card if their score is better. So it only helps the person that's being added as an authorized user. So it doesn't like the effect that it has is by adding someone onto a card as an authorized user, it is then adding that trade line to their account. Oh, I see what you're saying. So if you added him as an authorized user and he already has a great score, then like would adding him as an authorized user on a card for even a legitimate reason, would that lower his overall score? It may impact it might lower his average age of account. If like you have a very new card and you added him onto it as an authorized user, it could lower his average age of account. But if you pay, once again, if you pay on time every time, it will not negatively influence him for that trade line beyond the fact that it, you know, if you've got a spotty payment history on it though, definitely don't add him as an authorized user because he'll inherit that spotty history. The other thing to like know about that with the adding an authorized user is like, so they're gonna like add that, but know that your overall score isn't what influences trade lines. The only thing they inherit that is shared is the trade line you add them to. So like, for example, sometimes I add Aaron as an authorized user on one of my cards so that I can get bonus points. The only thing he gets is that card. He doesn't get my overall credit score. He just gets that card. It's kind of like water flowing from a full tank into a less full one. It doesn't work the other way around. Yes? Yeah, pretty much. This is also one of the ways to start building related credit history with someone that you're like not married to and therefore maybe not on a mortgage with or something like that. I'm glad this was helpful to you, Serge. I thought this was very interesting. Rural added this. This isn't actually a question, but I wanted to read it out. So Rural just paid off a ton of student loans with public service loan forgiveness. Woot woot! It's very exciting. I made Rural a special badge on the forums for it, which is what you see next to their name. It's very exciting because not that many people have gotten it, so getting it is very exciting. Gives some hope to other people pursuing it. But when she paid off her student loans, they were forgiven through PSLF in December, and they showed on the credit report as paid in full. The student loans still show on my oldest account, so in 10 years when they drop off, I'll have some reduction in age if that matters anymore. Score went from 760 with the loans in December to 809 with them paid in full in January. I don't expect it to go any higher since we don't have any real estate loans. It'll fluctuate a bit, but that is incredibly important. I could talk about credit till the cows come home, as you can all tell, but one thing I want to, so there's two like elements that going into this. One, that your accounts, even after they're closed, continue to age on your account for a while, depending on the type of thing they are. But remember, the amount owed is 30% of your score. So when that dropped by $100,000, that really significantly raised Rural's score. They might go higher just as that account continues to age, blah, blah, blah. 140,000. Yeah, I remember it was over 100,000, but I couldn't remember how much it was. So yeah, that is a really significant influence on it. And that's one of the things that I mentioned with, a way to positively impact your credit score is paying off a line of credit. That's usually for revolving credit, not for student loans. But either way, it can significantly impact your credit. So, yes, for the person that asked how student loans impact your credit. Does anybody have any questions? There's a lot going on out here. She's doing a lot of things. Dora was bringing a sparkly ball into the box while crashing everywhere. Does anybody have any questions about credit? I love answering these questions so much. I love talking about credit. By the way, I recommend this Purrbon Manhattan. I'm going to try to get permission. It was someone who bought Purrbon, made this recipe up, and then Erin made it. So I'm going to try to get permission from them to share the recipe because it was very good. Is she more into sparkly balls than rattly balls? She has no rattly balls. But she has crinkly balls. And yes, she is more into the sparkly balls. Yeah, sparkly balls are getting moved. I think she's very annoyed that we're not paying exclusive attention to her. Nobody has any more credit questions, I guess. I just want to talk about credit forever. That's all I want to talk about. It's a flawed system is the most important thing to know, but it is a system you can work to your advantage. Having good credit it's just like one more tool in your toolbox. It isn't the be all end all of whether or not you're financially well or not. What I do enjoy about it is that I can get perks that maybe I can't get otherwise. Lower interest rates on, if I was to borrow money, I get lower interest rates, including on a mortgage and everything like that. One thing I wanted to mention is that your credit score is flexible and it moves all the time. So I keep talking about how you get dings and hits. Your credit score is just a snapshot in time. So it's just looking at that moment in time and making a judge based on the proprietary algorithm of whichever score you're looking at, of what your risk profile is. And that is one of the reasons why it can make a ton of sense to, like, for example, pay off your credit card bills before the statement comes due, because that snapshot in time is going to be better. If you do have like a solid credit report and you're not going to try to borrow any more money, take out any new lines of credit, you can also freeze your credit as well, which previously cost a fee but does not cost a fee currently. That is one thing you can do, but if you're trying to actively improve your credit, I would not recommend freezing your credit, because that, once again, it's a snapshot in time that's constantly evolving. And also, to not freak out too much over small moves in your credit score. So like my credit score usually fluctuates somewhere between 804 and 824. And I will get those dings or, because I applied for a new credit card because I'm into this travel hacking, I might charge a little bit more and not immediately pay it off. Like I'll pay it off before the statement date, but I don't immediately pay it off. So it'll report as like 2% utilization instead of 1% utilization. And it's not like super important. Dean says, I think our numbers are different here in the UK. I think here being in the 400, 500s is good. Yeah, it's totally different in every country. Any way to get a negative incident off your score before the full 7 years? So the 7 years here is referring to 7 years is when short scale sales, delinquencies, liens, bankruptcies. 7 years is when they fall off your credit report. And fall off means that just like they literally fall off the bottom. They stop getting reported. Yes, there is ways if, for example, it is not a real thing. Like I said, almost a third of credit reports have errors on them in the US. If you just think about like how much information is getting reported every single month to all of these bureaus, and you think about how many people have like lived at your address and how many people might have the same name as you, and how often, fathers and sons that might live at the same address might have the same name, you start to understand why there are so many errors on credit reports. Like how many John Smiths are there out there that end up mixed up in people's credit reports? So, If that negative incident that is on your report is something that you did, there are ways, but it's usually going to involve negotiating with the creditor themselves, because the creditor is choosing to report that negative incident to the credit bureau, right? It's all reported by them. So sometimes you can negotiate. For example, if you have old debt on your credit report that was like a charge off or something like that, sometimes you can negotiate with them where, oh, you have this charge off, but if you want to pay it off, you can actually call the creditor. Working with the creditor can do magical things, especially if it's an old debt they don't expect to get any money on. If you pay them some kind of money, you can get, once again, remember, always get this in writing. Don't do anything over the phone without also getting it in writing as far as paying them. But sometimes you can negotiate and say that you want it removed from your credit report. If it is an incident that you didn't do, like that is like, it's a negative incident and it's not true anymore, you can dispute, and you have the ability to dispute with all of the credit bureaus if you find inaccurate information, which is one of the reasons to check your credit report at annualcreditreport.com. I recommend doing that, but also I use one of the third-party ones because it makes them a lot more readable. I always thought here your rating went down if you pay it off because they want you to pay interest, but that could be wrong. So that's actually true here. When you do pay things off, sometimes your score can take a little dip, like prepaying student loans and stuff like that. It can take a dip because you're not reporting that positive payment history every single time. It's a little bit, yes, in the end, they want you to pay interest, but for example, the reason that rural score increased so much was because there was so much owed, and then all of a sudden so much had dipped. So it really kind of depends on the type of report. Usually the hit that your credit might take, for example, by paying off a student loan early, is the small ding that you might get for, not having that active reporting every month is not worth the overall other impacts to your credit score. Any truth to the idea you should occasionally carry a credit card balance to build your score? No. Carrying a credit card balance, which means that like leaving some on the card month to month, it is a common myth that it helps you build credit. No. Using the card actively and paying it off every month does help build your credit. And I think where this myth kind of like, I don't know if it had sneaky origins from, they like started rumors in order to get you to charge money on credit cards. But this myth, I think, has some like history in it, which is that like your card, if it is not active, it won't be actively reporting to the credit bureaus, which is why I recommend having it just set up on auto pay and have a small amount on it that gets charged every month so that it's active and actively reporting. But if you pay off the balance before they report the balance, it shows up on zero on the report. That is correct. It does show up on zero, but it will still be viewed as an active account. So you'll still get that positive payment history, even if you pay it off before that. But no, you do not need to carry the balance. Yes, you do generally want to know when the snapshot happens, at what day in the month. It's usually pretty easy to tell on your credit report, like what day the snapshot happens, but it's different for every bureau. And that being said, your like statement date might fall on a different day. If you have trouble paying off your balance before whatever the statement date is or whatever, then one of the things you can do is actually can call your creditor and ask them if they can move their payment date. You can move it around your payday or whatever it might be, but you can usually ask to move it. There's no reason that they wouldn't want to do that for you. And you can kind of time that game if you want. I only recommend paying it off right before the statement date if you need to keep that utilization extremely low. For example, I pay mine off like just on the auto pay date, which is not before the statement date. It's just, every month I just have an auto pay to pay off whatever my balance is on the same day. And that's because I have so much available credit relative to the amount that I charge on my card that my utilization is 1%. So I don't worry about paying it off. So what the credit reporting companies is not based on the statement date of the card. Yes. Isn't it great? What the credit reporting agencies are getting is based on the day that the credit card or the loan or whatever reported to them, which may not be your statement balance date. And each of the credit bureaus will often only do a snapshot on, they won't necessarily do a snapshot on every single day that you have a creditor reporting. They will just do a snapshot in time. Yes, Serge is correct. It's based on when they feel like they want to check. But this is what's very helpful. If you do like, so I have like one main card that I use that I just charge all kind of my regular things on. And if you're like regularly active and putting a couple dollars on at a time, what's nice is you can see based on, if you know, like roughly, you know, if you look back at the running total on your credit card, for example, and you know that like it was $434 on Wednesday, and then you charge $7 on Friday, you could go look at your credit report and see that it was $434, and you know it got pulled on either Wednesday or Thursday. So helpful, yes, sometimes. My biggest recommendation, if you are doing a really, really big purchase, like if you're thinking about financing a house, for example, getting approved for a mortgage, then what you want to do is you don't want to be actively charging on those cards. And you could, that is when you want to either do the, you know, paying off before the statement balance date, or you could just stop using your cards for the 90 days leading up to it. And you definitely don't want to be playing any games like, you know, trying to get new cards for travel hacking or something like that for 90 days to 6 months ahead of applying for a really big purchase. And the reason you want to do that is if you're going to take a slight ding to your credit, remember like applying for a new card gets you 10 or 15 points off for 90 days, then you might end up getting a higher interest rate on that very large purchase like a mortgage. And then that higher interest rate can equal tens of thousands of dollars over the life of the loan simply because your credit score is 10 or 15 points lower than it might have been if you had just stopped using all of your revolving credit. Does that make sense? I did answer your question, Pixie Dust. You can use investment income. They are not allowed to discriminate based on the type of income. So alimony, anything like that, you are allowed to use it. Does it matter if it's realized versus unrealized gains? It should be realized gains. System is rigged. Wow. I mean, I think the reason that the story of credit is, I think, so fascinating to me is one, it's all a game. It's just a game that you're participating in, and you need to understand the biases of the game. And the biases of the game is that it is a system set up to help lenders. It is not set up to help you. So if you think from the perspective of what lenders want, remember, it is just a system to determine if you are a good risk, if you're going to pay back the money you owe. So you need to think about it from the perspective of that. Like, you need to think about it from the perspective of the lender. Yes, there are a lot of downsides to the system. That being said, it is a relatively easy game to play compared to a lot of the other games out there. And while there are systemic barriers to it, there are a lot less than there have been previously, thanks to the benefits of the internet and the ability to, you know, just pay an auntie if you don't have one to be your, you know, set you up as an authorized user, all of that. Like, I think it's important to understand that, like, the system ain't great and there are a lot of improvements that can be made to it, but it is a game that you can play. This is one of those things where it's like, you know, people get really stressed out about their credit score and like that it is a symbol of how good they are with money. But all it does is say how good you were in the past at paying off debt. And there are a number of reasons why maybe in the past you weren't great at paying off debt that may have nothing to do with things inside your control and certainly don't necessarily reflect how you are with money now. But that being said, it is easier to recover your credit than I think almost any other part of your financial life. You know, like savings. That's just a grind. You just got to do it. Long-term retirement and investing, you just got to do it. Credit, paying on time every time is the most important part, but there are games that you can play to raise and work within their system. Play the game intelligently and it looks like a good, better bet. Yes, and once again, want to emphasize your credit score in the US, it's a little different by country, but like your credit score does not, like, if you don't plan on borrowing money, it doesn't matter that much, but there are things it has an influence on, which is one of the reasons why I think it's a good tool to have in your toolbox. But if you've ignored it forever and you've just always paid cash for things, you don't have to work on it. It's not like a necessity, but it can be a helpful thing to have in your toolbox. And if you're ever going to live in New York City, you should have a good credit score. Unless you have like $1 million to buy a place in cash. Like I said, I've been watching way too many apartment tour videos. Okay, well, we've answered a lot of credit questions. We've been talking for a long time. So I'm going to eat this donut, and the tail end of this donut, I'm going to ask you all what you are looking forward to this week. It's kind of like just eating a deep fried piece of buttered jam toast. I assume everyone on this stream has power and internet, but I hope that you all get to keep it all week. It's not pleasant to be out of it. And safe drinking water. New York City real estate is amazing. I feel the opposite. It's terrible. It's the worst. I started watching it because I was thinking about applying for a job that might require relocating to New York City. And I've always known how bad it is, but it's so much worse than like, even like London. It's just bad. It's just bad. Being warm and bored. That's pretty great. Now might be a good time to get into New York City. Aren't the rents low now? Yes. It's kind of, but it's phenomenal how excited and how outrageous the like reviews of New York City real estate right now, where people are like, there's some people like moving back to the city even though they don't have a job, because they're so excited that they can afford to live in Manhattan on alone. Which is like for $1,700 a month, they have like a shoebox the size of, you know, a small rug, with like terrible amenities. It's, I understand why it's very appealing to people to move right now, because I think there are things that you can get, like most of the landlords are so desperate. Some of them are just holding on to inventory thinking things will turn around in the fall and they would rather like not rent it out, but like you can get 3 months plus of rent. Rents have dropped, like free rents have dropped a lot, but at the same time, New York isn't my dream city, so I think there's a lot of people for which they're very excited because they either live in New York City already, previously lived there, or like they've always wanted to move to New York City and they're like, now is the time to get in. New York has never been my dream city, so I'm sort of like, for every month I don't live there, I save so much in not paying rent, even if it's cheap rent for New York City, that it kind of, you know, poof. Oh, beautiful update, Erin. Latitude is on their winter break. Oh, that's very exciting. Yeah, lower for New York City is still bad. That was the much simpler conclusion to all of my ranting. It's just, I'm amazed at what they call apartments there. It's not like I've lived in apartments that crappy. It's seeing what people are paying to live in apartments that crappy. And how excited they are about that. Yeah. It is very weird times. But I just like seeing people being so excited. They're like, this apartment is only $3,500 a month. What a crazy deal. And like, they're genuinely excited to pay that much for like a 2-bedroom that like has a kitchen like size of this. So I did feel like watching all of these when one of my friends who's watching the stream, but I won't out their real name, but when they moved to Portland, they had previously lived in New York City, and I complained when I moved into this apartment. I was like, yeah, the kitchen's pretty small here. We've made it work. But they were like, never complain about the size of your kitchen. And I was like, yeah, but New York City's not like the same. But now after watching what qualifies as a good kitchen in New York City, I'm like, I will never complain about this kitchen again. So, it kind of is my dream city. Love the idea of being surrounded by all that culture, etc. But you need serious money for it, I bet. So I feel that way about London. Like, obviously, it's much harder for me to go to London for visa reasons. But, like, I love London. I chose to live in a shoebox in London for $600 as a sublet just because I love London so much. And I would put up with a lot for London. And I just don't feel the same way about New York. So, yeah, I don't know. It's just, you know, it's just where makes you happy. Last time I was on winter break, there was a pandemic right after. Okay, well, I hope that doesn't happen. Oh, are we getting a beautiful, beautiful view here? Oh. Hello, welcome to Kitten Cam. Okay, well, everyone, please stay safe out there, and you know, pet a cat if you have one available. I hope you all keep clean water and power and internet this week. Stay safe, and I will see you all same time, same place next week.